All right, welcome back. Let's get to our research team now to give us a list of top 10 stocks as we begin the day. And there are plenty to talk about this morning, so let's get straight to it. Vivek is joining in first up to tell us about Siemens and why you should be watching that one. Vivek, over to you.
Well, good morning. Yesterday Siemens held an analyst meet and, highlighted quite a few things. Remember, this particular year has been quite significant for Siemens, given the multiple steps that the company is taking in order for corporate simplification and restructuring as well. So first up, what's actually happened is Siemens India has now become the fourth largest business for the parent globally. Along with that, management has given an update as far as the potential demerger of the energy business concerned. They have received a proposal, and at this point of time, management will go through the proposal and give their comments back to the parent entity. Now, talking about the business itself, the management has highlighted very strong growth as far as the domestic market is concerned. There has been significant infra spends as well as pickup in private capex, so quite positive read-through over there. Along with that, going forward, they believe long-term growth drivers will be digitalization and industrial decarbonization. Along with that, the company has a digital platform called Siemens Accelerator to accelerate the digitalization in India. Now, an important point as far as the manufacturing sector is concerned, the company has said that they are targeting a transition to from labor arbitrage that they enjoyed earlier in the Indian market to now a productivity arbitrage, given the multiple initiatives that they are taking. One concern that markets had was the margins that the company would enjoy in the mobility segment, especially given the large order they got as far as supplying 9,000 horsepower train sets. So in this particular locomotive segment, management has alluded to and has allayed concerns, saying that this particular margin business will have strong margins. Along with that, they are saying power transmission segment is seeing significant pickup in capex activity and looking to benefit from local as well as global transmission equipment short supply. Lastly, they've also gone ahead and approved a capex of 416 crore for capacity addition in power transmission as well as vacuum interrupters.
Okay, thanks a lot for that, Vivek. Let's hop across to Mangalam. He's here to tell us about Allcargo group companies. Mangalam?
Well, Allcargo Logistics ended at the high point in yesterday's trading session, despite a weak outlook that the company had given in terms of business. So perhaps some part of the street was sussing some corporate development, and that's exactly what has come about. It's a two-step scheme of arrangement that the companies have announced between Allcargo Logistics and the other listed entity, which is Allcargo Gati. Now, what exactly will happen? In step one, the international supply chain business of Allcargo Logistics will be carved out into a separate entity called Allcargo ECU. In that, the shareholding will mirror, because everyone will get one share for Allcargo Logistics of Allcargo ECU. The remaining entity, which will have the Allcargo's express and contract logistics business, in that Allcargo Gati will have a merge, for which Gati shareholders will get 63 shares of the resultant Allcargo Logistics company for every 10 shares that they hold in that. And remember, the companies also announced a bonus, so the stock goes X bonus 3:1. So these swap ratios account for all of that. So, if you do a quick back of the envelope calculation, it seems like of the 7,000 crore market cap that Gati Allcargo Logistics is trading at, 3,000 crores has been attributed to the express logistics division, in which Gati will be a part of, and the other 4,000 crores would be that of international supply chain. This is basis the last close price of both these entities.
All right, Mangalam, thanks very much. Crisp explanation there. Now, let's move on. Abhishek is here. I think the monthly cards data is here. SBI card should be in focus. Abhishek, take it away.
Well, to begin with the credit card data for the industry as a whole, total cards were up 19% YOY and about 1.4% month-on-month. So the momentum with respect to card distribution remains strong. Total spends were up close to 40% YOY and a decline of 10% month-on-month. Now, the decline is seasonal in nature, given the fact that last month you saw festive spends coming up. Average spend per card was up 17.5% YOY and a decline of 11.24% month-on-month. The average spends per card is the second highest ever for the industry. So for SBI cards, the total spends were up about 34.8% YOY and a decline of 11.3% month-on-month. Total cards were up more than 20% YOY and up about 1% month-on-month. Average spend per card 17,237, which was up 12% YOY and a decline of 12.2% month-on-month. So talking about its market share, the spends market share declined sharply to 19.54% versus 19.81% in the previous month, and the cards market share is the lowest that you are seeing in last 9 or 10 months or even more, coming in at 19.01% versus 19.08% in the previous month. Back to you.
All right, thanks a lot for that. Well, let's hop across to Vivek now. He's going to track some stocks that are in the news this morning. Vivek, over to you.
Well, that's right. Quite a few stocks in focus. The first on our list is GMR Airports Infra. Some positive news flow coming in there. National Investment and Infrastructure Trust would be investing close to 675 crore in an SPV that the company has come up with, given the fact that the company will now be developing the Greenfield Airport at Bhogapuram in Andhra Pradesh. The second stock on our radar is WPIL, order win coming in over there. Company has received an order from the Public Health Department in West Bengal. This particular order is for execution of a turnkey project for water supply scheme. The total size of this particular contract is in excess of 425 crore. And lastly, AB Organics, very sharp mover in yesterday's trade. Like we mentioned earlier, Chowatia family has sold close to 12.5% stake in the company via block deals. Some good names coming in there, large funds coming in there, BofA Securities, Goldman Sachs, ICICI Prudential Mutual Fund, Malabar India Fund, Morgan Stanley and ValueQuest Advisors, all of them picking over 1% stake in the company. Additionally, just prior to market close, yesterday the company also gave an update to the exchanges. They've signed a memorandum of understanding with a global manufacturer of electrolytes, and this is for a strategic collaboration for manufacturing of these cells. So, positive news flow continues as far as AB Organics is concerned.
All right, thanks for that, Vivek. Well, let's wind this down with Upasana, who's joining to tell us about some more stocks that are in the news. Upasana?
Well, first up is LIC. Government grants one-time exemption to achieve 25% minimum public shareholding within a period of 10 years, which is mainly from the date of listing till May 2032. Next up is Brigade Enterprises. Sidwin Cotec Private Limited has signed a lease agreement with Brigade Group to secure 54,300 square feet of Grade A office space at Brigade Deccan Heights, which is in northwest Bangalore. Next up is Railtel Corp. The company has received work order worth 66 crores from NF Railway Construction, which is mainly for supply, installation, commissioning of integrated tunnel communication system, emergency call arrangements in the tunnel at stations in Bairabi Sairang new single line.
Right, thanks a lot for that. Well, here's a quick recap of our top stocks with positive news flow. There's Siemens, Allcargo Logistics, Gatti, GMR Airports, AMI Organics, LIC, Brigade Enterprises and Railtel Corp. While the only stock with negative news flow on our radar today is SBI Card. But let's also get a quick handle on what's happening with the brokerages this morning. Sudarshan has poured through all the brokerage notes for us. Sudarshan, what are you looking at?
In brokerages today, we have first Jefferies on Mahanagar Gas. It has a buy rating. Target is rupees 1350 per share. It says partnerships with auto component makers have started to bear fruit. Higher tie-up of high pressure, high temperature gas is compensating for APM shortfall, and electric vehicle risks are manageable. Next one is MS on Bajaj Finance. It has an overweight call. Target is rupees 10,000 per share. It says Securities Appellate Tribunal has quashed SEBI's order on Carvi and lenders to be paid their dues with interest. Bajaj Finance had written off Carvi's exposure of rupees 320 crore in FY20. This will be 2.4% and 1.9% of FY24 and FY25 profit estimates if company receives the amount. Next one is City on 361 WAM, which was earlier known as IFL Wealth Management. It has a buy rating. Target is raised to 750 from 615 per share. It says company is well placed to roll out mid-market strategy by April 2024, and scaling up teams and geographic diversification will aid further. Also, City believes flows likely to remain strong due to market leadership.
Thanks a lot for that, Sudarshan. Well, Manisha Gupta joins us to tell us what all went on with the commodity markets overnight. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, which are surging close to $80 a barrel. The markets are watching out for the Houthi attacks in Red Sea, which are expected to take a 40% cut in sense of oil shipment from there. But not so much oil flows from there, but the street will keep an eye on to developments here, and that is what is adding premium to prices. Good gains is what we've seen in natural gas prices, 6% of gains overnight, and this is after the IEA has reported bigger than expected storage draw at around 87 billion cubic feet here. Also, there are delays in export plans with ExxonMobil, Qatar Energy, Venture Global, which seem to be adding some premium finally as we head towards the year end for the natural gas prices. In metals as a space, it's largely trading within a range. The volumes are expected to decline ahead of the Christmas weekend. But even with that, copper is trading at a 4-month high. You have aluminum trading at a 2-week highs, and gold holding around that $2,040 an ounce mark as well. So good going when it comes to metals.
Okay, Manisha, thank you very much for that. So that's basically the commodities back in focus. We'll take a quick commercial break here. We'll come back and we'll get into our discussion. Siddharth Khemka of Motilal Oswal Financial Services with stocks and what's happening in the market, his bets. We'll have the management of V-Mart Retail. Motilal Oswal has written a report titling it Winds of Change. V-Mart has been a big underperformer, although from the recent lows it's come up. So are things turning around for the company? That's the question. Anand Agarwal, CFO of the company, in a bit from now.